Hey guys, it's Jordan here from Coin Bureau Trading, and I'm here with another video on my favorite indicator, which is market Cipher. Please make sure you watch the intro video that I dropped last to get an understanding of all the different parts of this indicator. Now it's time for things to get exciting, and I'm going to look at an actionable trading strategy using the market Cipher indicator. This is the strategy known as wave trend divergences. After watching the previous setup and intro video, your indicator should be looking like mine on your charts. For the first few examples, we're going to keep it quite simple on this daily time frame. It's much easier to understand a new indicator on these higher time frames. Once you get better at using the indicator and more familiar, you can move down to lower time frames depending on your trading plan and risk appetite. As I explained in the previous Market Cipher video, this blue wave is your wave trend, and these lines between your waves are your divergences. Looking back at some fairly recent price action for Bitcoin on the daily time frame, we can see 3 of these signals did print. One specific setting I would recommend on this indicator for these wave trend divergences is to make sure that your wave trend bearish divergence minimum is 45 and your wave trend bullish divergence minimum is minus 45. For more conservative traders, you can put this to 60, and the less conservative traders might want to lower this, although I wouldn't recommend it unless you're highly experienced. On these previous 3 prints, we can clearly see the reaction that we had in price from these bearish and bullish divergence signals. Again, this is a simplification on the daily time frame, but this kind of a strategy can work on lower time frames once you've practiced the confluence with the other parts of the indicator. If you are trading along with us, please do take advantage of this awesome campaign that we have just for this community from TOOBIT, where you can actually get free capital for your account just by registering. You can also then double your bonus when you trade just $1,000 on futures. You can also get an extra $30 bonus just for depositing $100, and these bonuses increase nicely as your deposit amounts increase all the way up to a $30,000 bonus. Something really important to understand for this strategy is the confluence needed with the other parts of this indicator. Let's have a look at this prime example that popped off right here on the 10th of October in our giant dump on the Trump tariff war news. We can see that just a little bit before, around the 7th or 8th of October, was when we got our wave trend bearish divergence printed. This is the first sign that things are looking like a short trade, and I would always recommend using the confluence of some other indicators, not just market Cipher, such as your fixed range volume profile. As many of you know, I really like this indicator. I have a tutorial on it on my personal trading channel if you want to check it out. And we were clearly in the value area high of the range on our fixed range volume profile, which means that we were in a position of power for the short trade. Now we have the go sign on our bearish divergence, and we have the level of confluence with our fixed range volume profile. The 2 major levels of confluence that you want to find on your market Cipher indicator when trading these divergences are your VWAP, first of all, should be crossing down. For those of you who have watched the intro video, will remember that when the VWAP crosses from the upside to the downside, this is a strong reversal signal. We can see here very clearly that in the same daily candle that we printed our bearish divergence, we also received a cross on our VWAP from the upside to the downside. This really is the second level of confluence here that we want on our bearish wave trend divergence. Looking at price action candle reading, we also had the beautiful bearish engulfing candle coming in. So already that is a few levels of confluence. We've got our bearish divergence. We've got our VWAP crossing down. We've got price in our value area high of the range, and we have a bearish engulfing candle. The next important level of confluence that we want, and the last one to wait for if it hasn't come in yet, like in this case, is our money flow pointing in the same direction as our trade. We can see here in this instance that as the bearish divergence printed, our money flow was still pointing up. This means that you hold your guns even if you have your VWAP crossing to the downside. Then we can see at the end of the next daily candle, our money flow started to point in a heavily downward sloping direction. This really is the ultimate final level of confluence for this strategy. And now we had 5 levels of confluence. Here we can see what a banger trade this turned out to be, even if you entered somewhere in the next daily candle before the major dip, all the way down to a 15% measurable move on Bitcoin. Always be sure to draw in your trades before you enter them. Give yourself a little bit of buffer above your previous swing high for your stop loss, and then make sure you're always bringing your ultimate take profit down to at least a 1-to-3 risk to reward ratio. As I've said before in previous videos, my preference here is to always take your first take profit somewhere around a 1-to-1 risk to reward. So when you have achieved a similar distance to your stop loss into profit in your trade, that is where you can minimize your risk by taking some profit out of the trade. Some conservative traders will even take their initial margin out of the trade and let their current profit ride further. Another good strategy here at 1-to-1 is to bring your stop loss to a break even so that you are now in a risk-free trade. On the next bullish divergence, we can actually see why this 1-to-1 risk to reward risk managed profit taking strategy is quite a good idea. Here we can see the printing of the bullish divergence. We can also see that our VWAP crossed to the upside and our money flow was pointing in an upwards direction. If we drew in and entered this trade somewhere in the next candle after all of these signals printed with confluence, our trade would look something like this, with our stop loss below our previous swing low and our target up at around a 1-to-3 risk to reward ratio. Here we can see how powerful the 1-to-1 R profit taking strategy is for risk management and keeping your win rate solid. If we took our first take profit somewhere similar to the distance between our entry and our stop loss, we would have at least managed our first take profit and our stop loss to break even on this trade, making it a profitable trade. For the less conservative traders who don't put their stop loss to break even, we can see you would have hit your first take profit and now you would be in a little bit of drawdown. At the time of recording, we're not quite sure yet whether this trade will then go to hit stop loss or come back into profit and go up towards our next take profit targets. Remember to always use Fibonacci retracement for your profit targets, and there is a full video on this on my trading channel. If we start to zoom in a little bit closer to the 4-hour time frame, we can also see some very nice signals coming in, but the closer you zoom in on the time frames, the more experience you need with this indicator and with risk management in general. Here we saw a very strong bearish divergence print with our VWAP crossing to the downside and our money flow pointing in a downwards direction. There we saw a very nice trade moving down through a few take profit levels and actually hitting our final 1-to-3 risk to reward ratio take profit. Although you may have decided to exit this trade when the bullish divergence signal came in. Here we can see that this bullish divergence was a decent trade that would have given us the 1-to-1 risk to reward ratio, but it didn't play out as nicely, and this is the warning sign that we got for that trade not being as ultimate as we might like to see. We did see the bullish divergence come in and we did see the VWAP crossing to the upside. However, our money flow was giving us a curve that didn't look too convincing that money flow was pointing up. On the other hand, here we see that the next bullish divergence that printed with the VWAP crossing and the money flow pointing up actually gave us a very decent move to the upside. This move from where it printed had a small amount of drawdown before moving up to reach our final 1-to-3 risk to reward ratio take profit. Even though this strategy is quite well rounded, I would recommend using other drawing tools and indicators for confluence such as support and resistance, candle patterns, Fibonacci, moving averages, etc. This strategy gives us 3 levels of confluence, and as a rule of thumb, I would always look for at least 5 levels of confluence for a trade in any direction before entering. I hope you've enjoyed this strategy video. Please practice on demo and backtest using paper trades first, and of course, always use risk management.